Okay, stream should be up. September 7th, Power Hour review, 3:05 p.m. Eastern Standard Time. So let's start off with figuring out how the market has moved since lunch session. Looks like straight vertical. So let's go through some of these moves. Vertical to the upside. Right now, consumer discretionary overtaking XLU for high of day, up 2.96% today. ADR of 3.1 off of a 2.09 average ADR. So this is a larger than 1 ADR move to the upside. Utilities up 2.91%. About $1 away from all-time highs XLU. Materials strong rebound 2.59%. Every single sector other than energy is green on the day. Well above 1.5%, every single one of them. Energy bounced nicely off of its lows of today, but it is still down 1.33, so it's a full market-wide pop. Important to keep trend in the back of your mind here. For solar, all-time high today. Tan up nearly 6% today. I'll go ahead and post some of these charts really quick. PBW up 4.42, gold miners up 3.71. So really it's just a market-wide pop. Jets up, retail up, both of those up and over 3%. Internet-related names up 2.89. AMLP, red to green, so that's your first energy industry that is now sitting green on the day. Strong recoveries off of some lows from earlier today. Particular regional banks. Regional banks peak to trough right now have moved 2.4% off of a 1.62 ADR, so that's almost a 2x ADR in a regional banking industry. That's pretty high. So we'll go ahead and post some charts here. We can get a general sense of what's going on. Start with the big boys at the beginning though. Don't post it for solar. First things first, let's try to get the indexes into perspective here. Obviously, today, big thrust day up. But I want to reiterate that we're not emotionally based traders. We stick to logic. In the event that we are short, for example, today, in a growth pop, this is a market-wide pop. Short growth areas, those positions are going to suffer, but keep in mind that the idea of what we're trying to capture, which is not the price from lunch session to close on a Wednesday. Trying to capture a broader move, and in this case, what are the trends telling us in regards to what our original idea are our trade ideas invalidated? If they are, feel free to stop out. If they're not, don't get in the habit of stopping out. Maybe you'll save some money in the short term, either today or another trade if you stop yourself out prematurely. In the long run, though, you deteriorate your edge. There's a reason why you took those positions to begin with. Get out of those positions when something is fundamentally changed that makes those ideas no longer valid. If they're still valid and you're just caught in an opposite direction move on the day and they're not stopped out, don't get in the habit of stopping yourself out prematurely, okay? So you got the Qs, you got SPY. I'm going to post IWM as well. And then just ask a general question. What do we think here as a group? Up, down, sideways? No wrong answer, by the way, 100% opinion based. But think about it logically. What do you guys think? Reset, reframe. Let's say you have no positions on the books right now. What would you expect to be happening looking at these three major indexes? Yeah, I mean, I would generally say down as well. It sucks that we're caught right now in a day where the entire market pops up, for sure, 100%. I'm caught right now too. But in the grand scheme of things, if you're not getting stopped out from a chart perspective, which is what we're going to talk about in a second. Thank you, Vinny, for bringing that up, by the way. I was going to lead with that. Don't stop yourself out. Which leads me to the next thing I want to talk about really quick, because Mike's on here, and I think Mike and I made this decision a long time ago. And so, Mike, I don't know if you can talk right now. I don't know if you're at the office, but got a DM that said, do we run our stops based off of the chart, or do we run our stops based off of the percentage won and lost on the actual contracts? Personally, and what we tend to teach in here as a group is chart-based stops. But I'd like to have the conversation with you guys. Chart-based stops make the most sense to me for two reasons. One, because our entire trading thesis is based off of a chart. Therefore, our original stop out position is based off of price action on a chart, and we just use the options contract as a vehicle to capture that trade idea, right? We could trade equities if we wanted to, but we're trading options because we believe that we have an edge directionally, and we amplify that edge by using derivatives, which are leveraged, right? With options, we're not going to be making 600% on our first solar move using straight shares. It's just not normal, not going to happen. So we use options. We can risk less, we can make more. Secondly, if we were to actually trade based off of the options percentage, it would make more sense to me, and feel free to disagree with me, it'd make more sense to me to play the actual contracts as the statistics say, something like D-sharp does, for example, where if it has a 95% win rate, you're going to be risking a lot to make a little, and you're going to repeat that trade over and over and over every single time, and honestly, you might not even have to look at a chart. So if you're using the option contract as a way to capture a trade idea, to me, it makes no sense to base the trade idea off of the percentage of the contract. One thing you do have to realize, though, which is what we talked about yesterday, you do get caught in a pullback and your stop loss is wide on the equities basis, right? The chart. You're going to end up, you run the risk, I should say, of those expiring worthless. But on the other side, the good thing about options is you're only going to lose the amount that you risk as long as you're not a net seller, right? So if you're throwing up $100, $200, $300, the max you'll ever lose is that much. That in of itself should be reassuring. If that's too much to bear, you need to position size down. And that's generally, I don't think any of you guys have that problem. But newer traders that come in with no experience definitely do have that problem. Mike, the question is just, I got a DM earlier. Do we run stops based off of the chart, or do we run stops based off of the percentage of the contract? In this case, chart. The guy that DM, he said he was down 40% on one of the shorts, was wondering if we normally close based off of that, or if we wait for the idea to become invalidated on the chart.
Ideally, if you're not being chopped around for a super long time, if you get down 40%, then that's usually where on the chart will say you should be exiting anyways, right? Unless you're just being chopped around and your premium just goes to zero, then that's a different situation. Or you're buying like weeklies, right, or something that's going to expire in the next 3 days or whatever. But yeah, with us, the amount of time we buy, the chart doesn't work out for us. We can exit and hopefully not be down more than 40%.
Yeah, I mean
that seems to be where we're at when the chart tells us to get out, anyways.
That's one of the added benefits of buying time on your positions. That's why we try to go out at least 45 days. And in this case, at the beginning of next week, we're not opening up Octobers again, at least as a group. You can do whatever you want, but as a group, we're going to be specifically targeting Novembers. And that's part of the reason. If you do get caught in a pullback like this, if you have 60 days till expiration, the name itself might pull back 3% on the chart. That options contract might go down 20%. And then the next day it resumes the trend. And you're not going to close your contract just because it's down 20%. But if you're, like what Mike said, if you're expiring within 20 days or something, every move against you is going to feel like it's the end of the world. And that's when it starts to test your balls, for lack of a better word.
Like if you open 60-day contracts yesterday on Shop, you're not going to close today, right?
No.
And you should only be down maybe 10% or so, 15% or so. Should be just within the natural what do we call it?
Like I don't know, expectation or something.
Yeah, it's just we're just in the natural frequency of the market right now,
Oh, there
right?
you go. Yeah,
So like it looks like it's a big green day on QQ and SPY, but when you zoom out to the daily,
it's not.
it's just noise. Yeah.
And so sometimes I get worried saying this shit because let's say, for example, in a week from now, the Qs are hitting new highs up at 340. I look like an asshole because I'm like, chill out, guys. It's not the end of the world. It's just one day. But what happens if everyone, you know what I mean? What happens if people are like, well, I could have closed, but you told me. So, first off, a little bit of ownership, but zoom out. What is the overall trend telling you? And the reason why I started the conversation with don't get in the habit of building bad habits, and this is something that Mike talks about, the other Mike that we sometimes reference. He talks about this all the time, and I love him for it. He goes, listen, you might make a couple bucks here and there, you might save some money here and there, but if you're developing bad habits over time, the law of big numbers is going to dictate that your edge deteriorates and you're going to lose more than you win. If you make bad decisions consistently, you will eventually pay the price. And so on days like today where you're in the face of a big pop, zoom out. If your idea is to capture, you know, 5 days to 5 weeks worth of price action, don't get chopped out on day 1.5 if you open those things at the end of the session yesterday type thing. So there's definitely always a possibility that this was a floor and maybe we're going to start to create higher highs again. Of course, we're not soothsayers in here. We're not fucking Nostradamus. But the trend says down. We're trading off of the trend being down, and we have stops on the chart for every single position we take for a reason. If it hits those stops and it closes, and get out. That's it. Your entry was wrong. There's no problem, no foul. You knew how much you were going to lose maximum prior to even entering the trade. Everything is good. If you're not hitting those, though, let the motherfucker go. Just let it go. So for those of us that did not open positions yesterday and they were waiting for a pullback, this is your Christmas. Dustin in particular, we were talking about this at the beginning of the market. Dustin said, I want to buy on a green day. Here it is, Dustin. Yeah, I hate that chart actually, Robin. I'd prefer the Qs not bounce up to 420-ish. That would suck. Don't put that fucking evil on us. No, you could, dude, leave the chart. I was just joking. But that would obviously, if the Qs bounced up towards 420, that would take all of the shorts out. So I'm just giving you a hard time.
That was SPY, by the way. But
was that SPY?
Yeah, it was.
Yeah, that was SPY.
What the fuck?
I don't think the Qs have a symmetrical triangle that's quite as pretty, quite as clean.
Either way. I did read something interesting on Twitter. We're going to go through individual positions in a sec, but I did read something in particular on Twitter that I thought was cool. Let me double check this actually because I just took it for face value. Yeah, look at SPY versus the Qs ratio chart. David Cox posted that obviously they manage a couple 10 or $20 million of assets. They're talking about the last 8 weeks they've been excited because the market has been showing some strength, and so they started to buy and stuff. And he goes, we were thinking of taking advantage on this pullback in the Qs because we have an underlying thesis that it's going to start getting better sooner than what people expect. And then all of a sudden he tweeted again and he was like, but honestly, now that I look at it, SPY is showing more strength than the Qs. Reason why I pull it up here is he's right. SPY is showing more strength than the Qs, at least going back this entire year. And obviously some of that is because of energy, but realistically, I want to point out energy with it. Don't cheat here. How much of SPY do you guys think energy constitutes?
10%? 8%?
5%. Matter of fact, 4.63.
Yeah.
Energy, which is the only sector that is green on the year, Actually, utilities might be green now after this little pop, but it only constitutes 4.63% of the SPY. So the fact that SPY is showing relative strength over the Qs means there's other things than just energy working. So anyway, I thought that was an interesting fact that he had tweeted out. And when you look at the ratio chart here, it does show that SPY is showing relative strength against the Qs. So there are some other areas of the market that have been holding up well. For example, healthcare. Healthcare is down year to date, but it's only down like 12 or 13%, whereas IT and consumer discretionary, which is basically all of the Qs, they're down like 25%. So even though not all sectors are green on the year, some sectors are holding up way better than others. Healthcare being 14.23%. Financials are only down 11% this year. It feels like they're down way more. Financials are down 11%. They're 11% of SPY. I feel like they're fucking dead, but they're really not.
I was gonna say it's got to be financials that's holding SPY up against the keys then.
Yeah, it's healthcare and financials. Financials are down 11%. Healthcare is 13.5% down, and weightings, healthcare is 14%, and financials are 11%. So those are two.
Oh, I didn't know healthcare was that high.
Yeah, healthcare
Nice.
is super high. Yeah, healthcare is the second leading sector in SPY. Yeah, weight wise. Anyway. Yeah, you're absolutely right. It was fucking insane, Robin. For those of you watching the stream later, Robin says there's a point where Tesla is worth more than all of the S&P energy sector. So, okay, let's actually go through some of this stuff now that we had that little rant. Basically, wrapping up the rant, don't freak out. Even if you're wrong, everything's going to be okay. Zoom out, and you'll notice that days like today have happened many times, and less than a week later, price is hitting new lows. Eventually, it's going to bottom, though. Eventually, it will. How about this? This looks like an area of the market. If you expect this to be a buy day to the downside, XLC certainly looks like an area of the market you'd be looking to attack today. Pulling back up in towards previous support turn resistance. Bottom of that bear flag, if you will. I love it. Love this for an opportunity to short communications. You're not chasing, you're going to get steep discounts on contracts. You're wrong above 55.50, and we're currently at 54.19. You're giving up 2% to the upside for an opportunity to capture the original profit target of 50, which is about 8.5-9%. Yeah, that's fantastic. XLC. Healthcare refuses to break this 125 level. I'm going to post the healthcare. Look at this. There has not been a more resilient sector this year, going back to 2021 at the very beginning, than healthcare. It's done nothing, but it's also not died. We have 36 minutes. Energy has an opportunity to finish green. TAN's now up 6%. We won't post for solar, but we can post end phase. I think everything's going to be high volume today, which offers an opportunity. Let's point something out, though. This end phase play, I don't think anybody took it. I know Ian played it. Ian played it as open range breakout and then swung it for a profit twice. But then he did not continue to trade it. End phase, we were talking about, okay, we want exposure into semiconductors. This was like 8 weeks ago. End phase is a great place to start. And I don't think anybody grabbed end phase, but one thing I want to point out is we are now up off of that original analysis 15%. In the meantime, we consolidated for 41 fucking days. So if you took a directionally biased trade to the long side in end phase, you would not have been stopped out ever. We were never came close to breaking below 269, which was our risk off level to the downside. But you would have held through 42 days of nothing, and that would have just burned your fucking premium if you did not have enough time. So if your goal is to capture movements like this, you have to buy time. You absolutely have to. It's not negotiable. End phase is a good example of this. I'm not going to say it was a picture perfect trade because obviously we, and all things considered, we don't want to be holding something for 29 trading sessions that's not doing anything. But at the end of the day, had we bought when we first talked about potentially buying end phase, this would have been a winning trade, probably a triple digit at this point off of today's move. Hindsight trading is easy to say, but First Solar is a good example. We give Dustin props at the beginning of last week, but we can name drop him again today. He closed his First Solar position earlier because he's running out of time, which is another thing we don't like, right? Think about this. And Dustin played this beautifully, so don't get me wrong, because he bought this in August. Dustin bought this position August 3rd, so it's not like he didn't buy a lot of time. He bought the next month out, which is fine. But I do want to point something out, and this is not to criticize Dustin whatsoever, and there's no real learning opportunity for Dustin here because he played it right. But can you think of a worse fucking position to be in than something making an all-time high? Look at this fucking chart. You're at an all-time high with nothing holding you back. It's price discovery mode, and now you just ran out of time. That's the worst possible fucking situation. It's worse than any loss. It's worse than any fucking loss you can incur is potential profit that you're not going to be able to capture due to time. That sucks. Obviously, it's easy to say right now, well, shit, I should have fucked, or he should have held. What an idiot. But at the time, these decisions have to make sense logically. As long as you can say, listen, I closed, I was running out of time. Every day, theta's moving against me. At the beginning of the market, it didn't look like things were going to pop. As a matter of fact, things looked like they were going to drop. So he made the right decision, I think. Fantastic play, but this is why we buy time. So in the future, you will find yourself in situations like this because we continually find ourselves in situations where we are buying all-time high breakouts. We do it. It's something we look for. Don't hamstring yourself by not giving yourself enough time to play through the whole movement. Yeah, everything. Yeah, the entire market was slowing, right, Mike? So absolutely cannot criticize the position whatsoever. Dustin played it beautifully. As a matter of fact, if I were Dustin, I would have closed like a week and a half ago. So he actually outplayed me. Anyway, there's my little speech. Try to give yourself time. Scan. Post some koi fin charts so we can get a general idea of sectors. The quarter to date charts are going to look crazy now today. I know we brought this up earlier. Today is a big enough move to influence the year to date chart. So that's kind of a big deal. We refer to our position. We refer to our profits in strictly how many vacations to Hawaii we can purchase, right, Dustin? I made a 1.5 Hawaii trip on this trade. Got quarter to date and year to date sectors. Year to date industries, quarter to date industries. Year-to-date factor analysis. Quarter-to-date factor analysis. Anything change here? Now listen, today's moves are big enough to influence the chart on the year-to-date. It's a big deal. Look at the quarter-to-date. Think about it from this perspective, though. Are any of these that were currently in downtrends off of their peaks in the middle of August breaking those downtrends? I'm looking through every single one right now. The only thing that has broken its downtrend that I can see positively is TAN, T-A-N. That's it on the quarter-to-date chart. That's the only thing. That's not. This is still technically a lower high for every single thing. Consumer discretionary is a lower high. XLE is definitely coming down, at least on the quarter-to-date, and it looks like that on the year-to-date as well. XLU potentially. Today's move pushed it up and over the previous high, so this could be a potential higher high for XLU. But we know that when XLU is hitting higher highs, very rarely does that mean that the growth sector is going to hit higher highs. Generally, people are buying utilities because it's a defensive sector. Everything else is still in relative downtrends. Everything. XLV may have found a minor floor, but it's still not in an uptrend. So yeah, everything is still in downtrends here. Everything, including XLE now, by the way. I think that if I were to just isolate energy and show you guys what it looked like, well, maybe not. I think I'm pushing here on that. We'll skip that idea for now. We'll wait until the end of week to see if it confirms it. Year to date, factor analysis. Look at the trends on some of these growth areas. Nothing is in uptrends yet. These are still lower lows, still lower highs. Nice. I did not notice that, Mike. All right, let's scan. $50-day highs. Let's check through and see if there's anything, if there's a pattern here, if there's anything here worth looking at. Lulu, 50-day high, baby. And phase and for solar are on here, but there's other solar energy names as well. Some really shitty ones like SunPower. Huge move today on SunPower. Switch over to 50-day lows, but I'm actually going to look at the ones that are still down. So here's an interesting thing. 50-day lows, there's 151 names. Change from open down, now there's now only 46 names. So 100 of those ish names have reversed off of their 50-day lows and are now green. All right, let's go through some of these. Still like the idea of potentially loading shorts here. I think Dustin is on the right track here. Dustin, let us know what you're thinking of in terms of those shorts. Same list as from earlier, so nothing has updated. I'm actually going to take off that change from open down, and I'm going to look at everything here that hit 50-day lows. Actually, how about this? I'm going to look 50-day lows, but are now up. 103 names hit 50-day lows and are now up. So what I'm looking for are names that broke and then got bought back up by the market that might be offering us an opportunity to use that level break, which is now potentially a BRB as a risk-on area. There you go. There's a creative use for scanning. Let's look for the things that bounced intraday, potentially giving us an opportunity to get short. You guys remember? You guys remember Fisker? All these meme stocks, man, they're like showing up on the charts, and I just remember them because of JJ. Fisker used to be a $32 stock; it's now $8. What did Chinese stocks do today? Up or down? Mine are up 2.31. I expected them to be down. We don't trade big pharmaceutical companies a whole lot, but do you guys remember Novavax? It was a $331 stock, and it's now $30. Jesus, man. I also did not realize that Novavax at one point was $3, and at the height of the COVID rally, it was up 8,800%. All right. Good to know. I would expect a lot of charts here showing pipe bottoms. Just want to point that out. I bet you that's probably going to be something we're going to see across a lot because of the last two trading sessions, right? We found an area for a breakdown yesterday, and today we're going to get the full reversal. I think there's going to be a lot of pipe bottoms. Just a sneaky feeling here. And Vax is one of good old Danny. The shotgun approach, right? When people start their analysis off with this is the Amazon of whatever, it's already bullshit. Western Digital. I know we looked at Western Digital before. Here we go. Okay, hang on. Okay, here we go. Potential. Western Digital, and it's cheap. Let's see what we're doing here. Zoom in on the current fractal. That's a BRB. $53 IV, meaning you can just straight up grab these if you want. 37 fives will run you $1.09. If you want to spread this down to 35s, it'll cost you $48 for a max profit of 202. At that point, I'd probably just go ahead and buy a 37.5. You're going to get about a 55 or 60% discount on the put debit spreads, but you're also going to cap your profitability. 37.5s are only going to run you $1.10 right now. Huge open interest on the Octobers, over 3,000. IV's at 53.4, IV rank 34.7, WDC 37.5, profit target 10% move on a 3.13 ADR. Yeah, I like that setup. That's a nice setup, right? Am I wrong? I feel like that's actually really good. From a risk to reward standpoint, that 37.5, I like it. I'm going to type that up really quick. We'll look at the Disney as soon as I'm done jacking my job out this 37.5 for Washington Digital. Any objections to this? Am I like looking over something? Because I feel like this might be too good. It's cheap, like I said. I don't think it's worth even grabbing the spread at this point. It's so cheap. Yeah, if you're comfortable with $100, this is a good opportunity. You have some time on it, and I'm looking at the 37.5 as a potential profit target off of the realistically the 41.5 pivot to the downside. 37.5, you're looking for a double-digit move, 10%, and you're looking for about a 2 to 3% move to the upside to invalidate this. So realistically, anything above like 42.5 and you're out. So you're going to risk about $1.25 to capture about $4. Yeah, I like that. It's about a 4 to 1, give or take, from a spot standpoint. Disney October 135 calls. Is this like an elephant print?
Yeah, just large volume today.
The 135, so this is a 0.05 delta. That's got to be a hedge, right?
Yeah, it's probably some sort of spread with the 120, 125.
Yeah, I was gonna say at the 0.5 delta, it's a lotto ticket. All right, you're looking at Disney. What do you see? What are you seeing with Disney here, Dustin?
I just see a pullback into a horizontal level I had charted before.
Your horizontal level 112.50.
Well, around there. It was actually a little bit lower than that, but
Semantics, right?
yeah.
I have mine down at 108.85 area, but I don't want to discourage you from your level. I'm going to post. The only reason why I have mine here is because this was a trade that we had talked about taking as a group. We never did. I don't think anybody grabbed these. But we used the 108.83, 108.85 area as the risk on there, and we're bouncing off of that today. Whether or not that's important, I have no idea. But the RSI is poking its head above the 50 here, and we never cleanly broke below it with any sort of thrust. So something to keep in mind with those Disney plays. But if you like it at the 112-ish area, yeah. I mean, realistically, you open it up today and promise me that if it does not drop by tomorrow, you're out. Because you don't want to hold these up towards that 120 area. It's thunderstorming down here right now, so if I randomly leave, I apologize. The power went out. Okay, we have 15 minutes left. Let's talk. Let's have the uncomfortable talk about open positions that we have, and let's update those stops and take those stops if we need to. Feel free. Anybody want to go first? I'm taking the close as an opportunity to get rid of the small portion of energy that I didn't do earlier today. I'm net red on this, even with this pop-up. So, latest tranche of energy plays, I'm out. I'm taking a loss overall. And that's with me taking profits on the front side before the breakdown. So I held a large portion of that, expecting a larger move based off of that rounded bottom fractal on U.S. oil. Didn't play out. Broke to the downside today. I'm not going to continue to hold those contracts. And I'm out. Had a loss. So good job to you guys that played it better than me. Google. Yes, you did. But that's a good way to look at it. Yep. I think the thesis is still the same. I think you got caught in a pullback prior to the capitulation move. You're going to be starting from a hole, but I don't think the trade idea is invalidated. Would you say hasn't hit above 1150? Yeah, I tend to agree with you. 1150, 112 is probably the stop on that Google play. Shitty day to be in Google, but at the same time, idea is still valid. Yeah, I got it. I'm going to go down the list of names that we went through earlier today. I'm going to get rid of some of these energy plays now that everybody's out of them. Okay, let's look at shop first. 32. 32 makes sense. Yep. It's Friday's high. $32 makes sense from a technical standpoint. I agree. Google 11150/1112 area. 100% agree. Ford trade that Alex took we had talked about maybe why this was a bad short to take. Not bad. I don't like to say that, but RSI was not firmly breaking below the 50, which is one of our entry requirements. I think Alex jumped the gun on this. He's caught in a consolidation. It's not necessarily clearing him out yet, but I guarantee you, seeing as how Ford trades, this is probably down 50% at this point. I don't think he's kicked out until it closes above. Well, could be realistically right here. I don't know where he is. I think he's in class right now, but we'll see what he says about it tomorrow. This right here is a coin flip on whether or not you'd want to close this. I was going to say 1550, but I'm not in the position. I don't know what he's down right now. ON position still looks fine. Caught pullback. FIS. I think this is one of those names that doesn't have any. Yeah, there's not a whole lot of opportunity on the chain there, but this is a BRB on FIS. Using the 91.25 area as risk on. FTNT, nobody's in. I'm removing that. IP. Did anybody grab the IP play? I'm going to keep this as a pet project and continue to watch it, but I don't think anybody grabbed it, so I'm not going to talk about it. Octa surprisingly showing relative weakness, so it is up 1.57, but everything else is up huge, so Octa still looks fine here. Nobody's in meta yet. 15750 on that break with a close. Today we did tap 15681, so almost there. It's a good no trade on meta. I'm in CEG, that's up 1.03%. Pfizer not kicking us out yet. Removing PARA, nobody took it. Vinny Roku 69. Yep. Yeah, 69 makes sense. Kevin, what up, man?
Not much. Haven't looked at any of my trades in 2 weeks. I'm up 102% shorting Lennar. Down 86% long bonds.
Dude, I'm taking the TLT position on the chin like a champ. It was a hedge. I'm fine with it.
Yeah, at this point, I stubbornly let it go to nothing before I would sell it right now.
So yeah, I don't think it's stubbornly. I think think about the potential reward versus the risk, right? There's very little risk left in the trade.
Yeah.
Not to change the subject, but how'd you do?
I feel good about it. I don't get my results for another 6 to 10 weeks, but I felt really good leaving. I was kind of uncomfortable with how well I felt because I didn't feel great leaving level 1, and I crushed level 1. So I was a little suspicious.
Cool, man.
But
when do you get your results back?
6 to 10 weeks.
Congrats on the next five weeks of stress.
Yeah, I have to give a presentation to a couple thousand Stiefel advisors in less than 3 weeks, and I have not done a single thing for that. Got an email today that I have to forward Stiefel Marketing an overview of what I'll be discussing, to which I didn't even think about what I would talk about. So
really quick, you opened up Western Digital October, the 37.5p. What did you open up an IP, Dustin? Just so I can make a thread on both of these. IP is like the cowboy trade right now, just so everyone's fully aware. 1.76 ADR, and you're shorting a fucking paper company. It's cheap, so it's fun, but 37.5 for you got filled at the 50. Perfect, man. You just saved yourself like 20% off of this morning's premium. Dope. Okay, I'm gonna post both these. Are you running the same trade idea? The 38 as your potential profit target and the 40.75 area as a stop. Well, I get 41.75. Sorry. All right, just making sure I'm gonna post it.
fuck you. Oh my god.
Kevin, I'll be in Florida next year. We're gonna go out for drinks or what?
Where?
Probably Miami, but if we're already in Florida, then might as well take the 6-hour trip over.
Well, I'm only a 45-minute ride from Miami.
Oh yeah, we're probably gonna go to Miami because my girlfriend's a
Oh,
fucking
yeah.
Latina. Think she's gonna step outside of Miami? You fucking crazy.
Listen, I don't go south of the Fort Lauderdale airport religiously, but if you're down there and I'm here, I will make an exception.
I love landing at Miami because you're definitely not in the United States anymore.
Aero Electronics probably looks like a nice short to most of you, and our proprietary signal on the TA side would agree. ARW. Apple holds. I'm not going to short any secular transitions, but ugh. I had a recruiter at Bridgewater Associates try and push the trading associate role on me when I applied for an equity research opportunity specifically to cover tech. They want 5 years of experience and a finished CFA. So I don't know, this might be lofty. You should apply for this.
I interviewed for the trading associate role for the.
I know you do that.
The overnight European trader.
Yeah, they didn't describe it as such, but they said that on call, on occasion, off market hours, European and Asian, whatever, 6 days a week. I'd have to move to Connecticut.
didn't mind that part. I was living in fucking Chicago at the time. I'm like, well, Chicago to Hartford doesn't seem like that big, or it wasn't Hartford. It was where is it? Where's their campus? It's not Hartford.
Yeah, it's right outside Hartford. It's Westport, Connecticut.
Yeah, Westport.
I don't know. I'm interested, but I applied for that role like a year and a half ago and would have been ecstatic to do it, but the timing kind of sucks. I don't really show too much staying in my current position for 12 months, you know. Most of my fundamental upgrades and downgrades have not played out.
It's your first year, plus this is not a normal market. Don't feel bad.
No, I mean, if I filter through our analysts by performance, most of our tech analysts are not doing well. It's hard to, like, I came on a year ago and picked up 38 and then 43 companies. And most of the shit trades on, sequential issues. Like, how was I supposed to foresee a golden screw issue that restricted 400 million in revenue in a quarter or next quarter? I don't. As a generalist, it's nearly impossible. I won't have that excuse next year, but it's a nice card to play.
It is, but also your bosses, they understand the fucking game.
Yeah, no, I won't.
Not to cut you off, but if anybody has any questions prior to the close, feel free to post them. I'm posting these setups that you guys took today in the charts and setups. Anything that you guys need help with, get it on into the trading floor right now. Stops, profit targets, trades you're taking at the end of session. Landon's going to get on with 32 seconds to go and tell us he grabbed 4 things within the last minute. So before he gets on, because he does not shut up until he's done, post your shit.
Just go, everyone just short Sun Power with your whole account. I have a sell on it, and it's ripping my face off. I had probably 16% in my direction. I put a sell on it right around here. 27 something, I don't know. And that sell was doing great up until today. I sit here on their March analyst day that I never went over before, trying to figure out if this is a price movement or I'm fucking wrong and I need to move my opinion to hold. Not made that decision. I don't like to be wrong, which is nice because I never am, ever.
Except if it's women or sports teams.
Yeah, it's at fantasy football.
Powell PM tomorrow. All right. Okay, so I posted the 5 or 6 positions that we've started to open up. Western Digital, International Paper, Okta, Shopify, Google, Roku. I'm going to update Okta, Shopify, Google, and Roku after market closes. Give it about 5 minutes with updated commentary, whether or not stops are hit, etc. But as of right now, since nobody has anything, I feel like everyone's taken care of. Everybody's good. We have no strategy session tonight. It's moved to tomorrow night.
So all right. Congratulations, by the way.
Yeah, thanks.
Taking a leap this weekend.
Yeah, we'll see. I'll tell you in a year if it was a good idea.
No, you have to tell me in 6 months. You'll be afraid she's listening a year from now.
A year from now, we'll be in the United States, so. I'll tell you over a beer. I'm going to end the stream 1 sec.